I'm Charlotte McLeod with investingnews.com, and here today with me is Chris Blasi, president of Neptune Global. Thank you so much for being here. Great to have you as always.
Thanks for having me on your show, Charlotte. Great to be with you again.
Of course. So we've got so much to get into today. And of course, we're going to start over with gold. I think our last conversation was all the way back last September. So much has been going on with gold. We've got a lot of ground to cover, as I mentioned. You've told us, I think, over the course of a number of years that gold is currently in the third leg of a secular bull market. So I thought I could start with that positioning and just get your updated take on where we're at with gold. I imagine we're still in that third leg, but maybe there's nuance to add.
Well, Charlotte, you have a great memory. So I think we've had interviews going back probably like 5 or 6 years. So, and you're exactly right. That is something that I've been focused on going back over 10 years. And I think, when all is said and done, when you look at the chart of this gold secular bull market, right, it's going to be a classic textbook pattern. And basically this started around 2001, 2002. Ran up to 2011, then pulled back and did the consolidation. And the textbook says ideally you do a 50% retracement of the previous gain made. And that's exactly what it did, which ended on December 31 of 2015. And we're now in the third leg. And this is obviously going to be another multi-year leg. It has been. Some people think gold has reached its peak because it's breached 3,000, but I don't think we're even close. The third leg is when it delivers the greatest returns. So those who think they've missed out, I don't think that's the case, even though, of course, it would have been nice to get in at 1,000. But we still have a ways to go. And eventually we'll know when this market is through, because that third leg ends up in a tremendous parabolic blow off to the upside. And we have not gotten there yet, despite the great performance for the last 2 years.
Yeah, I think it's great to get that context, and it's good to know you'll know when we get to that peak. It will be very clear for us when we get there. So that's important to note. If we look further, go ahead.
No, I was just going to say there's another thing that's the old, it's a old truism. The amount of participation by individual investors is still minuscule, right? And classic bull markets and bear markets are always marked by participation levels. And what I mean by that is, when everybody that is talking and buying into gold and silver, that's when you have to start asking, okay, are we at the top? But despite gold's tremendous returns and performance for 23 years, that level of participation is not here. As a matter of fact, I think it's historically at a low level. It's really like 1%. So for the retail investing public. So just that classic, what contrarian they call it, we're not there yet.
Yeah, absolutely. I can tell you with great certainty that not everybody I know is interested in gold right now. So we'll keep waiting for that. And that ties into another point that I wanted to go over with you. I wanted to ask about the interest you're seeing from your customer base right now in gold and any trends that you might be seeing there.
That's great. So what I've seen is, I think we know on the big macro picture, the real drivers for the gold price is central bank buying. Sovereign wealth funds and extremely, well capitalized groups around the world. It's not individual investors. Therefore, I would actually say from our experience looking at the general retail client base, it's kind of flat for the last couple of years, right? It's not growing, it's not shrinking, but with the performance that you see in the market, you're not seeing what you would thought would be a stepped up interest and demand. Unlike back in 2004 and 5, when gold was in that leg of the secular bull market and it was rising at a nice clip, you saw a lot more retail interest. So, again, retail investors are not driving this at all. This is being driven by very big investors, and like I said, central banks. Now, on the retail side, it falls into two camps here. We'll say the ultra high net worth and high net worth folks, they are buying. I think the middle and let's say less well capitalized investor is participating at levels that are really lower than they did over the last 20 years. Part of that may be economic stress they're under, and I believe that is the case. Believe a lot of the middle class is really under great economic stress. I've seen, I would believe, more net selling by them, and I believe that's to cover living expenses. But the high net worth folks, they're coming in. So we're seeing actually probably fewer tickets trade, but much larger than historically we've seen.
Very, very interesting trends to note there, and it does make sense, I think, with what we see going on in the world. On the note of Neptune and what you are doing right now, I know you have a new strategic partnership, and I think that kind of ties into perhaps some of these trends. I'll let you explain it because it's a little bit complex, but can you tell me what it means and why it's important?
Well, thanks. And I think it's important. So what I've always looked at the market is most precious metals dealers, right? They're dealing with individual customers, and those customers are generally pulling money out of brokerage accounts or their banks, but a lot of it comes out of brokerage accounts because they've made the discovery through their due diligence that they want to own the actual physical metal. They don't want the counterparty risk that's associated with a exchange traded product or fund. A lot of times it gets a little adversarial with their advisor because they want to buy the physical metals. The advisor wants to keep them in an ETF. And most times they're successful keeping the investor with them. They don't want to lose those assets, right? That's how they earn their living. But sometimes those clients do pull that money. Now, our vision or my dream has always been to get into that bigger market, that mainstream. So we've built the technologies that now advisors that choose can buy physical metals through us. And it's not a referral program. These positions are then reported directly into the systems that they run their business on. So there's these, what they call software packages for wealth advisory firms. And they pull in the positions that they buy and trade, whether through their other custodians like Schwab or NFS or Pershing. And we're just another custodian. And now it all comes into their software that runs their business. So there's that single snapshot of all the client positions, their stocks, their bonds, and their physical metals, and they get to keep their AUM, right? So I believe it's a win all around. They don't have to fight the client. When the client wants to own physical metals, it just becomes a normal part of their trading and their business. And we believe that's a big milestone because that was not available prior. And, I believe that's obviously where the much larger market is and potential. And as the public will eventually get into this market in a big way, I think we're well positioned now to serve those folks in what we'll call, for lack of a better term, a mainstream standard investment advisor managed account.
That's really interesting. So thanks for going into that. And it does seem like you'll be positioned when we do start to see more of that interest come. So really good to go to that. We'll check in with you on how that's progressing and maybe the interest that you see there the next time we talk. I want to also, of course, talk about the drivers for gold right now. So you mentioned earlier in the conversation, central banks are important. And we've talked before about how that's related to currency devaluation. So I want to ask for you, is that still in the driver's seat here? I know there's a lot of noise right now about tariffs and other developments. So how are you seeing it?
So again, I like to it's great to be able to look back on a long track record, a long history. So this is a 23+ year bull market. And there's always, gold has generally been going up. Of course, there's times it pulls back a little and consolidates, trades sideways, but we can see that, it's been rising at a great rate for over 23 years. I think a lot of individual investors aren't aware that the rise in the price of gold, the performance in gold completely blew away the S&P 500. So for those that think that, oh no, but the stock market outperforms, that's not the case at all. And it is a little sad and disheartening not to see more investors take at least a 10% position along with their stocks and bonds. But so what do we see? There is always a reason that people who don't go in will say, well, gold is just not rising now because of tariffs. And once the tariffs get worked out, gold will go down. I mean, for these 23 years, there's always been those, well, it's just going up because of this. At the end of the day, the world is awash in debt that is unpayable, that there's only two ways out. You either default, and as long as you can print money, you don't do it, or you're going to inflate your way out. And that's what countries have done throughout all of history. So I think it's crazy to bet against that somehow after 5,000 years of human behavior, which is always the same, that it's going to be different this time. And regardless of how, we may be enthused about changes in administrations and such, and some of the good things they're doing, the staggering levels of debt and the ability to correct it is not possible, right? The dollar will devalue. And there's also, remember, gold moves on macro matters, which are unlike stocks, right? Stocks are actually much more simple, right? You take like stocks in like say Tesla, right? And they'll forecast on, what are sales going to be? And are we in a recession or are we coming out? Will there be more money to spend on cars? And it's much more simplistic. Gold is moving on big macro matters, and a lot of it, there's a lot of black swans that you can't forecast happening. Like as we speak, right, just a couple days ago, you had a very brazen attack on Russian strategic bombers, right, which is very destabilizing. And global instability will drive the price of gold, but that's not something you can forecast. So I would say we are in a world that's in the midst of change, calibration, reset, whatever you want to call it, new alliances, new enemies. And in that sort of chaos, that's where gold thrives. So, I think we're in a great position, those who hold gold. And I do not believe it's at its top. And actually, I don't see anywhere in the near to, intermediate term where things are going to settle down. And everything becomes amicable, and we just go to normal trade without the tensions and the problems we're experiencing right now.
Yeah, it certainly doesn't seem like these things are going to settle down anytime soon. And really, right now, it feels like the debt is in more focus than usual as we have this big, beautiful bill, at least trying to make progress. We've got that turmoil in the bond market. So I wonder if I can get any more comments from you there on what we're seeing and what we should be aware of as those things make progress.
So that's a great point. So, you're seeing probably the same news stories and headlines I am. Now they're saying that the big, beautiful bill actually adds $2.5 trillion of additional debt. So I think the problem is the country is addicted to debt, right? I think the amount of so-called savings that Doge was promising and maybe made people very optimistic that the debt could get under control and we could start paying it down, or at least not adding to it. It's not panning out, right? There's not that level of savings. And the economy this is an economy that's been propped up, I'd say artificially, by debt, by taking money from the future in order to prop up consumption and today, that it has to continue. And I think the big, beautiful bill is proving that. Actually, I don't fault, because I don't think the country can survive without that money getting pumped into it, right? The amount of unemployment and contraction that will come about without this continued adding to the debt and flooding the market with the money, is something that no one could withstand. So it goes back to the point, regardless of what the news stories may sound like and optimism, the dollar will continue to devalue for as far as I can see.
Yeah, I think that's definitely the message that's coming through to me from a lot of sources. And I wonder if I can get your thoughts on how inflation plays out in this scenario. I know people are often watching closely the Fed and what they're going to do. So any thoughts you would share on that note?
So eventually, I think we will be having, inflation will be rearing its head. We know they manipulate the statistics a lot, right? For how long? For over a decade, they were downplaying the real levels of inflation. I think it's just inevitable. What is inflation? It's you're losing purchasing power. So if the dollar devalues, you're going to have inflation. I think bond yields will be higher in the next couple of years, right? That's just the case. I think the world is losing its appetite for buying U.S. debt. I think the move by sovereigns and central banks to gold is dangerous to our inflation, right? If in order to attract investors, we'll have to offer a much more attractive yield. If you look at the Bank of International Settlement, right, this is a big event where they've made gold a tier one asset, right? Before that, it was basically cash and treasuries. So now gold is at that same stature. So if you're a central bank somewhere in the world and you don't want to be buying US debt and with all the risk that they, probably rightfully see, they have the option to go into gold and it has the same status as cash and short-term treasuries. So with those kind of headwinds, I think we're going to be seeing inflation, and we're going to see higher yields, and we're going to have a lot of the pain that goes along with that.
Yeah, and certainly you can see how it all comes back to gold. So we've talked about your longer term outlook for gold, which is bullish, of course. Heading further into 2025, how do you see the price moving? Of course, we have ups and downs, but any price call that you would make?
Yeah, of course, we always, since you've known me all these years, I don't put targets on dates of when it's going to hit. But I've always been comfortable saying that in the intermediate to longer term, it will continue to appreciate. On the short and sometimes even intermediate, that's kind of a tough call. I do believe we will end this year higher from here. I think 3,500 is kind of a realistic target, especially with the level of volatility and all the flashpoints around the world. And I think that's kind of a safe call. So, and I think we're in, after we did that multi-year consolidation, and again, yes, we've been in the third leg, but the third leg is basically going to be more up years than down. And I think this year and next year will be 2 up years.
I think that sounds like a very reasonable outlook on gold. So thank you for that. And I want to make sure we look over at silver as well. Usually we check in on what's happening with silver. I know people are looking at it and they're wondering, okay, gold is moving. When is silver going to stage a catch up? So what are your thoughts there?
Sure. There is a lot of interest in silver. When I talk about some of the larger retail investors, there's a lot of interest in silver. The conventional wisdom, and I don't disagree with that, is that silver is like a coiled spring, and there's a tremendous amount of upside. A lot of people will look at the gold silver ratio. It was over 100. It's just a little bit below 100 right now, but still historically, that's very high. Historically, they say it should be more in the range of like 40. So either the gold goes down a lot or silver has to catch up. I think it would be more obviously silver catching up from the sentiments that I've expressed, but that could take longer than some folks may realize. And I think one of the reasons why is, as we said, the biggest driver for buying gold is, we'll say, the central banks and the big sovereigns. They buy gold. They don't buy silver, right? The BIS, the Bank of International Settlement, has not made silver an asset, right, that you can hold. It's definitely not a tier one asset. So therefore, you just look at who the buyers are, right? So I think silver will get pulled along, but I don't think it's ready for that breakout where it kind of closes the gap and goes from to a gold silver ratio more in line with historic numbers like 40-1. I think it'll stay as it is. I think silver will appreciate, but I don't think investors should get frustrated. And I know many are, that it has languished and been so far behind gold's move. I think its time will come. It may not be for another 2 years, but again, the way the world is, it could happen tomorrow. But I wouldn't fret, right? If you own silver, I would say hang tight. That's my personal opinion. I do own it myself also, and I do expect a outsized gain from it on a percentage basis. But then again, that doesn't mean gold will be left behind, right? I think they will both be materially higher over the next several years.
Yeah, I think that's a lot of really good information. And people are wondering, I believe right now, okay, so is silver a better buy than gold at the moment? And it sounds like maybe you just need to figure out what is your timeline and where do you want to focus?
I would agree. I also say I would take a position in both as long as you have the resources to invest in both. I would say gold is still the foundational metal to the precious metals portfolio. So you kind of build a little diversification to the two. They always say, you got to have a strong stomach. Silver, it's much more volatile than gold. You got to be willing to hold tight longer, but I believe, it will start to appreciate. And when it does start to move, when it starts to really break like 35, which could happen this week, that could be a trigger where it starts to move much more aggressively. And when silver does do its breakout, I believe you're going to see big days and big percentage gains, higher than we've seen even with great days with gold.
Yeah, we really are so close to that $35 level. So we'll keep an eye on that and see how it goes. Aside from gold and silver, we usually also spend a little bit of time on platinum, maybe palladium. And platinum is one I've been pretty keen to ask you about because it's been range bound for years, but it's staged a little bit of a breakout right now. I know it's been in deficit also for years, and it seems like people are starting to get a little bit interested. So I wanted to ask if you are seeing interest from your customer base and also your thoughts on if we are really going to make a bigger breakout there.
So that's great. You're right. Nothing has lagged more than platinum. This is over a decade. It just languishes. And we do have the product at PMC ounce, so it's a component of the PMC ounce, and it's been the one that hasn't been much of a help. But I'm not seeing interest in retail. But from what I understand, there's starting to be accumulation by some sovereigns of platinum. And that falls in line with what's going on geopolitically, where trade is breaking down and trust. And I believe that it's being accumulated because it's considered still an important critical metal, and it's in short supply. It's a very thin market. And I think that's what's starting to drive the price, which of course is actually a better reason than maybe if it was just an emotional response and a lot of retail investors started moving the price. So worth taking a look at. It's languished where it has for so long. I think its base, the base is coming off, is extremely strong. Like there is a lot of support. So I don't think it's not prudent to maybe take a little bit of silver. Again, if you have the resources to even diversify a little bit more, and I'll just say, that's the whole point of the PMC ounce, the precious metals composite, that you're actually buying a position into physical gold, silver, platinum, and palladium.
Yeah, it's a very interesting product, and that's why I always make sure to bring up platinum and palladium to you. So very useful. And I'll throw in one question about palladium. It's also been a little bit stuck. Is there anything there that you're seeing that is of interest that we should know about?
I think it's really just trading just like platinum right now, right? So several years back, palladium had a very aggressive, powerful move, right? Then it pulled back. And now it's been trading just like platinum. They're very close in price. Its main use is in pollution control, right? In vehicles, both diesel and gas engines. And they are, you can use them. You have to retool if you switch from using platinum, palladium, and vice versa. But right now they're kind of, they're trading close in price, and they're behaving pretty much the same. So I think maybe going forward, instead of one breaking out and completely leaving the other behind, like palladium did, 5-6 years ago versus platinum, they're more likely kind of to trade in tandem. Platinum, though, for individual investors, if you're not buying something like the PMC ounce, is productized more, right, through different coins and bars. So it lends itself to be more easily owned, and a few greater options for an individual investor than palladium.
Okay, well, thank you for humoring me on going through all of those ones. They're similar but different, so I think it's worth talking about. And now that we've made it through all those precious metals, I will let you go, but is there anything else you would add for investors that you are watching or think people should know about at the moment?
Yeah, I don't want to be redundant. And we've been doing this for so long. And the upside of it is, and I'm sure a lot of your audience, they've heard other interviews, they've even, from different folks. And the message for gold has really been the same for a long time. And that shouldn't, frustrate people. What it should be is actually the positive is the drivers that were pointed out years ago are still firmly in place. Right. So it's not like we have to look for the next event. The foundational things. The deterioration of everyone's currency, whether it's the euro or the Japanese yen or the US dollar, right? They're all devaluing. The world's awash in debt. None of it is payable, right? What you look at is, there's been analysts that say as the world, sees that they can't get out of their economic mess and they have instability at home and a disgruntled population, they'll take you to war. Well, that looks like that may be playing out because we see for some reason Europe is like anxious to get into a war with Russia. And, is that just going to be a cover because of their failures, with their policies, both economic and, with migration and such. So all these things that were more forecast years ago are actually all coming into play. So those folks that forecast this over the last decade and more, they're right. The mainstream was wrong. The mainstream didn't see any of this coming. They did. And it's playing out. And all because it's playing out, it's got to play out, and it's going to play out over a number of years. And at the end of the day, the one asset historically that will thrive and come out the other end intact is gold and silver. You can't say the same thing about, stocks. A lot of companies may not be viable or may not even be around, right? Again, it's real simple. Gold's been around for 5,000 years. It's always retained value. There's been millions of companies that have come and gone in those 5,000 years. So I think at least a reasonable piece of position should be in a portfolio, alongside with the other stocks and bonds. But I actually think I sleep most comfortably regarding my precious metals, my physical metals. Again, not derivatives, not proxies, but actual physical metals, than standard stocks, and especially not fixed income products now.
Absolutely. I think that's a great place to wrap it up. It may be repetitious, but I think it is, as you said, this is all playing out the things that have been discussed for years. So thank you so much for coming on to go through this and give us a recap of what's going on right now.
Thanks, Charlotte. Great being with you again.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Chris Blasi with Neptune Global.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.